As a matter of fact, our ensemble forecast, which accounts for the other third, doesn't pull it down by a whole lot. It was still running around 200, or that is 2,940 or so, roundly speaking. So either way, directionally, it's played out according to our script. And I think it has further to go, predicated upon the macroeconomic conditions and the strong corporate fundamentals. And while I'm not so Pollyanna as to think that the market isn't a little overbought in here, and it's facing over the next couple of months a lot of issues related to potential risks that could undermine this otherwise tranquil period, I still think that directionally we see higher highs before it's all said and done.
So, Noah, Mark thinks that the market is not overly frothy and warrants maybe putting a little more cautious money in. How do you feel?
Look, ultimately, we can have debates as to whether the bull market started in 09, whether it started in 13, whether it took a break from middle of 14 to the end of 16. We can talk semantics. At the end of the day, what's going to cause a sustained downturn is the end of this profit cycle. And that's either going to come from businesses investing too much and too much supply, which really hasn't happened that much, or the Federal Reserve getting too tight. In either case, neither of those are on the horizon imminently. And so the profit cycle continues and the market can continue. We've gone sideways since January, which has really allowed the sort of E to catch up to the P, which got a little bit extended towards the end of last year. So, you know, for the most part, since the financial crisis, investors have pulled out nearly $250 billion out of equity funds and are just, you know, have been very, very tepid in terms of coming back and participating in the market.
So, Mark, as you see new highs yet to be made on the S&P 500, what sectors would you put money in at this point in time? Do you still believe in technology, for instance?
We do. As a matter of fact, software technology, to be specific, because, I mean, obviously you could see it today by way of the revision to Q2 GDP, where actual business investment was revised up to the previous number of 7.5% annually to 8.3% on an annualized basis. Businesses are flush. They feel good about business conditions not only today, but in the foreseeable future. Profitability continues to run at a heady pace, and I think that's a reason for them to continue to make investment in. Typically, software is a disproportionate beneficiary of that spend. And we also like anything, almost anything, consumer-facing. We're very bullish on the state of the consumer and expect them to continue to spend at a above-trend pace. So a couple of areas, I think, within that sector that you can nibble at particularly are some around the experiences. And one company was mentioned by Tyler early on, and that was Royal Caribbean, which is a favorite of ours relative to the prospects for bookings going forward.